Okay, hi guys. This video is going to be very quick. I just wanted to show you my strategy, and I also wanted to show you my entry points, just so it's a bit clearer, because usually when you go over past data on a chart, it's a lot easier to say and predict the outcome than it actually happening live. So it's currently 1:44 in the morning. Sorry if I sound a bit tired, but obviously, as you know, the old adage goes, the early bird gets the worm. So if you want to make money, you have to be up early or up late. But what we need to do, I'm going to show you from scratch. We need 5 EMAs and 1 SMA. Okay, so we need to go to indicators. You need to type in EMA. And you need to click this 5 times. So 1, 2, 3, 4, 5. And we also need 1 SMA. Okay. So basically, once we have those in, what you would need to do, you'll need to edit them exactly like mine. I'm going to put the numbers on the screen. But to change them, you just go to format here. Obviously select whichever color you like. There is no specific preference to help you profit. Whatever color you like, just choose it. The length is what we need to change. So as you can see, 13 is my first one. Just like this. The second one would be 55. And you can see again, we just do this. You just go through it and follow exactly what I've got here. So it's 13, 55, 110, and then 10, 15, 50. Okay, and I'm going to explain how we actually trade this strategy. There we go. Okay, so what we do, we need to be on a 1 hour chart, preferably Euro USD, because I've just found this strategy works extremely well with Euro USD. And what we're looking for, we're looking to identify a trend, just like this one here. And what we're looking for are the blue and red exponential moving averages, so the 13 and 55 EMAs, to pull back towards the 110 EMA here. And that's where we're looking to buy. So using price action, this is where we'd enter the market. Okay, and as the market moves up, so this is a swing trading strategy as well. We're not actually aiming to scalp. We want to leave this trade running for 2 to 3 to 4 days, as long as we can, to get as many pips as we can. So this is where we'd enter. So for instance, I've already circled it here just to show you guys previously. So we enter here, the market moves up, creates this new higher high for us, and as the market pulls back down, creates a higher low. We want to take our stop loss and move it up to here. Okay, because once this has been moved just below here, so we'd have a stop loss just below here, the lowest point, and once the market pulls back, it will then, obviously, as you can see, it start to rally again, and then that's basically what we're looking to do, is just hold on to our position and maximize the profit. And as you can see, the market pulls back again. There's another higher low here. We then set the stop loss there and basically work our way up and up the market, gaining as many pips as we can until eventually it falls through and it would have taken our stop loss out. But then you can see the whole gain that we would have achieved just from that. Okay, it's a lot easier than just trying to find loads of small opportunities on the market. It's just finding one big opportunity just like this. So we've got one right here. This is the opportunity I currently have. Basically what we have here, we have the 13, the 55, putting back towards the 110 EMA. That was a perfect opportunity to enter, because I entered that. I sent the signal out for everyone to trade. Also used Fibonacci retracement on this trade here, and it worked out very nice. I set that one wrong. I actually had the Fib retracement up there. So this is where we entered the trade, and then obviously we set our take profits like that. I'm expecting this, or I'm anticipating this price to come down to at least minus 27%, but we'll see how it plays out. But enough sidetracking, we'll go back to this strategy. There we go. So anyway, We're waiting for the EMAs to pull back, and once they've pulled back, that's when we know we have an opportunity to trade in the direction of the market. So we can see it's obviously been shorted a lot, very bearish. Market's pulled back towards the 50% retracement line, but obviously we don't know about this. We're just trading off the moving averages. You can see the blue and the red EMAs have pulled close towards the 110 EMA, and that's then where we'd look to actually enter the market. Now, you guys might be asking, when do you know exactly when to enter the market? What we actually do, we switch to the lower time frame, so we switch to a 5-minute time frame. And before I do that, let me just quickly show you that we actually have an opportunity here. The blue and the red EMAs are squeezing up together. I've highlighted those for you just there. And that's then where we'd look to enter the market. So as we switch to a 5-minute chart, we then hide the 110, the 55, the 13, and we show the 10, the 15, and the 50. Okay, now once we have those, once these have crossed over, once the blue and the green lines have crossed over the smooth moving average, the 50 smooth moving average, period smooth moving average, that's where we're looking to actually enter the market. And the stop loss, we need to place the stop loss above the last swing high or swing low, depending, if you're shorting or long in the market. And basically that's what we do. Once it's crossed over, we then revert back to our hour chart, and we show these again, and then that's basically it. So the idea behind making this quick video for you guys is I wanted to show you basically how I do it during market hours, because as I mentioned, it's a lot easier to show someone and in hindsight and say, this is what you should have done or that's what you could have done, but to instead actually show you whilst the market's moving, why I'm entering it, and obviously the strategy that I'm using. So I've entered this, and I'm basically I'm going to stop the video, and then I'm going to come back to you guys in the morning and just show you the results of trading this strategy. So as I previously mentioned, the stop loss is up here, and our take profit is just basically key areas of support or resistance. So I've basically just gone for the minus 27% on the Fibonacci retracement line. But you guys can obviously say, this was a really important area of support. That's why there's a huge wick. As soon as price touches it, it just instantly reversed, and you can see that huge bullish candle there. But you could say again that it's in a downtrend, and it's probably going to retest this area here again. So it's worth, basically setting that as a take profit. So the risk to reward ratio on this trade will be a 3.19. So if I'm risking, say for instance, £100, I'm looking to get back £319. So it's just an example of how it works. We have 8 minutes until the candle finishes forming, so obviously we're going to see some activity because people want to not manipulate the market, but they just want to change how the candle looks to obviously try and trick some people out. So anyway, I'm going to pause this video. I'm going to get back to you guys in the morning and just show you where we are at with the trade, but I'm very confident that this will probably be ending up round here. And if we're lucky, might even take profit by the time we wake up. But anyway, I'll catch you guys in a second. Okay, hi guys. So it is the next morning. It's 9:30 in the morning. This is how the euro against the dollar ran down. Basically, I guess we were so we entered it around here from this pin bar candle, and then price obviously went up to here. Luckily for us, it didn't take out our stop loss, which is good. And then price basically came back through, and then it's currently down here. So I'm just going to show you guys how many pips we're currently running in profits once this is finished. Well, actually, basically we're just going to go straight in and actually just show what we did. So once again, basically to repeat the strategy, just so you guys know, we wait for the pullback. We wait for these EMAs to come close together, just like this, like they have done here. Obviously, we've identified that this is currently running in a downtrend, and then we've basically waited for it to pull back, and we've entered on the pullback, basically to minimize risk and maximize potential gain. So we've waited for the pullback on the hour chart. We then hide all of these EMAs, we go down to the 5-minute chart, and then to execute the entry, as previously mentioned, we just wait for the EMAs to cross over. And as I mentioned yesterday, there's obviously maybe like a 4 candle or 3 candle lag with the EMAs. So when the price pulls down, the EMAs will still be up here. And as we predicted, the entry price would be roughly around here, which is where the price is at, and that's where the EMAs have crossed over, and that's where you'd execute your entry. And because you're executing it off the EMAs, price is currently here, so that's where the entry would be. The entry wouldn't be, on MT4. It wouldn't count it from here. It would count it from here. So when you draw your stop losses, just draw it from price and use your entry from price. Don't put the entry as here, because the entry is not from there. It's from here. Okay, so once we have a 5-minute crossover, we know the market's about to go into a downtrend. And that's when we switch back to our hour chart. And then basically we know the market's pulling down. I'm anticipating this to pull down further, because we're sort of basically getting a descending triangle, because obviously prices come through, and then now we have the triangle formation, and basically what we're expecting is basically price to just break through. As mentioned before, I'm just anticipating it to come down here. I've previously worked out the fib retracement points. So my first entry on the EMAs coming together was just up here, and that was on the 50% retracement line, which is also a good indicator as to where the market might reverse. So obviously we drew it from our highest point down to our lowest point. So I'm going to do that for you now, just to show you how I actually got these prices. So what we do when we're in a downtrend, we just basically click here, we drag it all the way down. At that current time, it's come down to our low point. It's then moved direction. You can see it's rallying up here. So basically what we have 0 just on the line, as you can see, just like that. So price is there, and as price comes back up, it tests a 50% retracement line. Sometimes price will break through and go up to 61.8, or it could go up to 78.6, or it could form a double top and actually eventually go up. But that's why we use price action, just to confirm our entry. We've also got a nice line of resistance as well here, so that gave us a good indication as to when to enter. So I had a pretty strong confirmation. So I sent out the signal for everyone to enter. I entered the trade as well. Obviously, I had a nice trade. It's pulled in. And basically, what I want to explain to you guys is you want to maximize. Obviously, you've risked, say £100 to enter this trade, because you've risked it coming backwards and taking out your trade. But obviously, it's come straight in profit. Our entry is very nice. It's basically executed on the line. It hasn't even run into our stop loss yet. Price has pulled down. I knew it was going to pull back up, so basically using price action, you could have closed your trade earlier, or you could have just waited for price to pull back to re-enter again, to obviously try and maximize the profit, or you can leave your trade running, which is what I've done. I've left the trade running since I think this was since Friday when I entered. I'm trying to work out exactly when it was. So it's on the 8th, which is when I entered. Actually, no, sorry, that was a Monday. But that's fine. So as we're pulling down, that trade's gone in. We've waited for another pullback. That trade's obviously come in as well. This trade's coming in right now. What we were to do, if we were trading smart, we could basically pull our stop losses down, so we could essentially move this stop loss down with it, and on the 5-minute chart, basically just do it off a last swing high. So for example, I could pull the stop loss down to here, so just above here, because I'm anticipating, it's in a downtrend, price might just come up to here and just reverse down. So maybe stop loss, maybe just up here might be best. But to calculate, as I was just mentioning, to calculate actually, nice, take profits, which are fairly accurate as well, using a fib retracement line. So we'll hit the 50% line just up here. 80% of the time, the market will reverse off the 50% trend line, 50% retracement line. So if you have a really nice setup, so this is known as Elliott waves. If anyone wants to look into it, it's the ABCD pattern, and we're basically trading the D leg, which is this one here. Now, to complete the formation of the D leg, this price needs to touch minus 27%. So that's why all my take profits from this long-term trade up here and this trade we took, this morning, early in the morning, 2 a.m. I've also set the take profit at minus 27%, purely down to the fact that that's where I'm anticipating price to go. And also, if you look across, you can see that the market starts, moving across back and forth as if there's some support and resistance. And which there is. If we go back and look, you can see there's resistance here, and obviously this has been used as support to go up. So that's basically the strategy. I just wanted to take it whilst it was actually happening and show you guys exactly how to enter and what the outcome, what to expect from the trade. The risk to reward ratio, obviously it's running in profit now, so potentially we could just drag this down and say there's absolutely no risk because now the trade's running in profit. We can actually just move our stop loss down to 0, so if it does reverse, we don't lose anything, we don't make anything, our balance is 0. Okay, but same again for this one here. I'm going to drag the trailing stop just above here because that was the last swing high. So as you can see, we've had a high up here, we've had a lower low, and then we've had a lower high, we've had a lower low, and then we've had a lower high. That's where our stop loss will be dragged down to, and now we're anticipating a lower low, which will be down to minus 27%. We're going to see how this performs. Obviously, RSI is quite low on the indicator. The MACD's crossed over, so that's indicating that this trend's likely to continue. But basically, we're just going to wait till minus 27%. I thought I'd show you guys, basically how I trade it and what strategy I'm currently using and how it's performing. It's performing very, very well.